Right, hi guys, I'm back again. It's been a long time since I've posted a video. But anyways, so I just thought that maybe I could share a few things that I've been learning, I think, over the past 2 years. I don't remember the last time I actually posted a video, but it's been a while. So I'll make a very short video. I'll make this very quick. So I think the idea is, if I do get good responses with this video, I'm going to upload more, and if there are people who are going to request that I make more of these videos, I'm going to make more. But for now, I think let me just share what I want to share. So I think there are these 2 trades this week which I took, which were quite interesting. So my approach, it's a mixture of a couple of strategies per se. I think I went through courses and material from forex gurus out there, and then I picked out the areas which I liked. So I don't have a specific thing that I stuck to, but rather I ended up having my own approach to the market which works out for me, which is which blends in with my character and my the way I like to do things. So as you can see, I use channels, I use support and resistance and all that, but for support and resistance I don't use the normal support and resistance, whereby you have your support and resistance line just going through, cutting across the years, but rather it's more of the recent support and resistance levels. For example, as you can see for this one, my support and resistance here, this is how I place it. That's how I place my support and resistance. I've seen that this is more relevant because price information that's been cut through by price, support and resistance levels that have been cut through by price are not as strong as they are perceived to be, and they cause limitations to some extent to your trading. So these recent support and resistance levels, the highs and the lows, basically the previous highs and lows, they are more likely to give better results. I'm not saying that people who trade support and resistance in the standard way, the normal way, are wrong, no, but for me this is what I've seen that actually works for me. So that's what we're looking at here. So for this particular pay, I want to make this very short. As you can see, I had my support and resistance levels. This was the previous high that had not been broken over here. As you can see, these previous 2 highs here that had not been broken. So I just set my support and my levels there. So initially I was expecting it to react here, but judging on what was happening with other pairs, I could tell that it wasn't likely going to happen. So I was just waiting for a place where I can take my trade. So as you can see, it came through here, it reacted a bit, then it went through. As you can see, this was also some sort of a third touch, but there was no confirmation here. That's the most important thing, because my confirmations, I take them on the 4 hour. So there was no confirmation here, so I left it. I just left it. I didn't take the trade there. So what I was looking for now was the next level of what support and resistance, which is over here. Go down, then it couldn't. Then it also happened. Let me just show you. It also happened here. This price trying to move down but failing. As you can see, even here, this bullish candle here, it went all the way down here, but it couldn't hold, actually close as a bullish candle. But then what happened is that as it got to the support and resistance level, it created this thing, right, this over here. It created this thing. So as you can see, it was a bullish candle, then a bearish candle there. I'll show you that there is there's activity sellers are actually getting into the market, but I couldn't enter yet because it wasn't what I look at, what I consider actually is for example, if this bullish candle here was engulfed by the next bearish candle, then I would see that a lot of sellers have actually gone into the market and are finding entry. But because the bearish candle was smaller, it means that there was more bullish momentum in the market. So then the next candle was a bullish one. Then after that, as you can see right here, we had this large bearish candle. So it was at this point which I was now convinced that there are sellers in the market, and given that this is it's an ascending channel and third touch has already been touched over here, there should be some activity going on here. That was my expectation. So what I then did is that I looked for an entry on the pullback. I'm not into trades whereby yes, sometimes you can probably take your trade here, then try to find your entry. I don't know, maybe risk that. Yeah, that's not who I am. I've seen that that's too much risk for me. I don't have that big of a risk appetite, so I can't hold 94 pips worth of risk. So what I do then is that I wait for a pullback. I wait for this pullback. So how I do it is that I go down to the lower time frames. I go down to the lower time frame, right? Alright, there we go. And then I just try and locate these areas, these hook points, which price is likely going to react on. It's basically another support and resistance level. That's basically what I'm just looking for. Here, as you can see, it came here, price went down, came up here, tagged the first time. So let me use this two over here. Tagged the first time, right? So for me, because it tagged the first time here, and you can see the candle there is actually the candle that it created here was a bullish candle, was like an engulfing bearish candle. I would have put my entry like this, just above the range there, targeting down here, or even further actually, because of the setup. The setup is actually you have to target further than that, but yeah, so you just target maybe because there is already risk reward of 2.79, so you target that. So you'd have gotten into profit about 24 pips, and then it came back, probably took you out, but I would have probably broken even, yeah, but I didn't take it at this point because I wasn't around. Then it came back a second time here. Right here, and closed. Well, because this bearish candle here was smaller than the bullish candle here, my confidence in this trade was a bit low, because what basically this is it's an aim formation that's here, and this candle doesn't really confirm it. But when it came the third time here, given that it's a third touch is highly likely to play out. So what I did is that I waited for it to close with a proper bearish candle, which was this one, and I just placed my risk above there. Then I loaded my trades. The first place where I targeted was here. Basically, after about 30 pips, I close my trades. But here I just this was the first TP here. Then the next TP, you see this level here. This is a significant level. This would be a significant level. There was likely I would have assumed that price was likely going to react because of what happened before. So here about 136 pips, close some there. Then go back to the 4 hour to actually look at where exactly price was meant to end up, right? So with this sort of setup, price is likely going to come all the way down here. So this would be the target. I'm out of the trade already because I closed, but this is the final TP before it has some sort of a large reaction back up. So that was the first one. That was GBPAUD. I think it's also similar to Euro AUD. It's pretty much the same thing. It's pretty much the same thing. As you can see, there's a lot of, okay, I'm going to remove all of this. So guys, just tell me if you need another video like this. I think that'll be motivation for me to do that. So as you can see here, it was sort of the same thing. Came here. So I do have these lines, these psychological levels, but I have them a bit more spaced out. The psychological levels that I use. So here it got to the psychological level. As you can see, what's important is that you had your bearish engulfing here. It's the same size. So I was expecting it to go back. Like I was expecting a move back here, a retracement, but that didn't happen. So I was in this entry until the next day. So I got my trade at this point here. This is where I got somewhere around here. That's where I got my trade at this point. So basically, this was the 15-minute. That's where I take my trades. Oh yeah, exactly, definitely. You see, shows me that. Like I said, I look for these hook points. So I was expecting it to probably come back here or here or somewhere on top here. But what happened is that in the morning, when I saw this very large bearish candle and then that slight pullback, so in this case, what I then noticed is that if I had taken it here, it was going to be again 38 pips is a lot of pips for me, so because I still have a small account, it's not that big of an account, so 38 pips is not that great. So what I did is that I waited for it to pull back, and I took it around here. I guess it was reduced to around 20 something pips. So there, took there, then my trade just pull it down. First TP here, looking at what's going on price at the left here. As you can see, it actually just went a bit further and then it did that pullback, and then another TP down here, by the trend line. So basically that's it. So this same strategy, if you look at last week, I think I was quite irritated. I don't like this NZD card. It's not it's not exactly my favorite, but I took it, and then I think I didn't manage to get all the pips I wanted, but I think I closed somewhere around here last week. Somewhere around here, that's where I closed. So I took my entry. In this area here, and I think it was around 11 pips stop loss, and then I bagged around 60 pips, just like that. So as you can see, this is another similar setup to the last one which I showed you. So basically, this is what I wanted to show you guys. If you're interested in knowing more about this strategy, it's quite straightforward, I think, but it took me a couple of years to get my things. Like I said, I learned from a couple of people, then I came up with my own approach, which has been working well for me. So if you want more of this content, please just get in touch. So I think that's it. I'm out.